Thanks for tuning in, Dividend Dashboard here, and welcome to episode 5 of Road to 100K Invested. This year I started this series as a fun way to track my progress towards one of the toughest milestones for any investor, reaching 100K invested. In each episode, I combine all my accounts to see exactly where I stand. I'll cover contributions, dividends received, portfolio performance, and my outlook going forward. If you're also on the path to 100K or just want to follow along on my journey, consider subscribing. I post these updates every month. With that said, let's dive right into episode 5. Let's start with the accounts. My 401k is now valued at $15,000, which is about 2% increase since last episode. The growth here has been slow for this account due to the lack of contributions. Next, my dividend stock portfolio has climbed to almost $30,000, which is a solid 6% increase from the previous update. This has been the bigger driver of growth this month, thanks to both contributions, dividends received, and market-beating performance. When I put both accounts together, my total portfolio now sits right around $45,000. That's a 4% increase, which is great progress towards the 100K milestone. Crossing 45K also means I'm nearly halfway to 6 figures, making this month feel like a real turning point in the journey. For contributions, I haven't added anything new to the 401k. My new employer hasn't finalized their plan yet, so I'm currently waiting for that to be set up before I can roll over my old account and continue building from there. On the brokerage side, which I manage through Robinhood, I've been a lot more consistent. I'm investing $160 every single week, which comes out to over $600 a month. This account is what really is keeping me on pace towards the 100K goal. My 401k is fully invested in the S&P 500 index, which gives me broad market exposure without having to pick individual stocks. It's a simple, diversified approach that I plan to keep long term. On the dividend side, my brokerage account is a little different. That portfolio is made up of 21 individual holdings, and it's where I focus on building consistent dividend income with adjusted risk and market-beating returns. Overall, a sweet spot between performance and stability when both accounts are combined. Looking at my 401k, since it's fully invested in the S&P 500, my top holdings reflect the largest companies in the index. Right now, the top 5 are Nvidia, Microsoft, Apple, Amazon, and Meta. No surprise here, these are the heavy hitters that have been driving the market over the past few years, and they are making up a big chunk of the S&P 500. Now, shifting to my dividend stock portfolio, which is more hands-on and consists of 21 individual stocks, my top 5 holdings are Hershey's, Google, MasterCard, Visa, and JP Morgan Chase. This list looks very different from the 401k, since here I'm balancing between strong dividend payers like Hershey and JP Morgan and growth-oriented names like Google, MasterCard, and Visa. Together, these positions bring stability, strong performance, and consistency to the portfolio. One of the strongest components of this road to 100K journey is dividends. Dividends add extra buying power on top of my weekly contributions, and over time, that compounding effect really starts to make a difference. Every payout gets reinvested back into the portfolio, which helps accelerate the path towards 100K without me having to add more money out of pocket. Here's how my dividend income has grown since starting this journey. In 2020, I earned $23. In 2021, $90. In 2022, I more than doubled, collecting $208. In 2023, the dividends really picked up, reaching $396. In 2024, I crossed the $500 mark, $537 received. And so far, in 2025, year to date, I'm already at $356. This steady growth in dividends shows how powerful consistency and reinvestment can be. Even though it starts small, year after year, the income keeps building. And that's what makes dividends such an important piece of reaching that 100K milestone. Now, let's take a look at the performance year to date. My 401k is up 8.40% so far this year. Since it's fully invested in the S&P, it closely mirrors the index but with slight differences. This is usually due to timing and allocation within the fund. In my case, it's because no contributions are entering the account. My brokerage account is doing even better, up 10.27% year to date. That's been driven by strong gains in some of my top holdings like tech and financials, along with steady contributions throughout the year. For comparison, here's how the major indices are performing. S&P 9.44%, Nasdaq 10.77%, and Dow Jones 6.60%. So overall, my brokerage account is slightly ahead of the S&P and right in line with the Nasdaq, while my 401k is a bit under but still delivering solid returns. This shows that the combined portfolio is holding its own compared to the broader market. Looking ahead, my strategy is to continue focusing focusing on high growth businesses as the market trends upward. These companies have been the main drivers of performance this year, and I want to keep building on that momentum. At the same time, I'll keep a close eye for any dips or pullbacks in individual stocks. Those moments can be great opportunities to add to quality positions at a discount, which helps strengthen the portfolio over the long term. As for adjustments, there hasn't been any changes this month. I'm still sticking with my plan of investing $160 per week into the brokerage account. On the 401k side, there's still no update yet from my employer, so I'll continue to wait until that plan gets finalized before making any moves there. For now, the focus remains on steady weekly contributions to the dividend portfolio. Looking ahead, my outlook hasn't changed. I still expect my portfolio to outperform the broader market. Beating the market means my investments can grow at a faster pace, which helps me reach the 100k milestone sooner. With strong positions in high quality businesses, consistent contributions every week, and dividends adding that extra layer of buying power, I feel confident about staying ahead of the indices. The key will be staying disciplined, taking advantage of opportunities when the market pulls back, and continuing to build on the momentum I already seen this year. That wraps up episode 5 of Road to 100k. If you have any questions, drop them down in the comments. I love to hear your thoughts, and if you made it all the way to the end, don't forget to like the video and subscribe to the channel so you don't miss the next update. If you want to keep watching my other content, I got videos linked right here on the screen. Thanks very much for tuning in, and I'll see you in the next one.